The bad news sent Tesla's shares down 3.12 today. Let's start with the awful news that dropped Tesla's stock 3.12 today. We also have some crucial market discussions. Germany lowered Model I prices. Some European countries, including France, the Mark I standard range fell 4.2 overnight in Germany. The Model E has 99.1 less long range and 8.2 is less power. These costs have fallen year 1900 for regular range and year 5000 for extended range and performance. A year 5000 price is worth more than $5,000. Cuts is year 543 in France. Model I standard range was lowered by 6.55, long range by 5.7 and speed by 6.7. Standard range, long range, and performance Model I prices reduced by year 3000 and year 4000 respectively. Europe saw massive price decreases overnight. They'll impact Tesla's profit margins, but the most significant thing is that they're happening worldwide. Tesla has lowered pricing in China and Europe since 2024. As the US follows suit, prices are expected to fall further. Why buy Tesla today if it could drop costs again next week or tomorrow, possibly in the US? Because Tesla is so vital to the markets, Wall Street thinks the worst is yet to come. China and Europe rank second and third. The US is the most significant market, but China may become more important later. Europe is third, China second. Gary Black estimates on X that Model I deliveries this year total 54,000 or 11 of Tesla's Q4 volume. Gary Black estimates that these pricing reduction will cost the corporation 15 cents in EPS in 2024. His estimate dropped from $33.90 to $3.75. Gary Black also believes that this price decrease in Europe won't increase Tesla sales because other European companies would likely have to lower their pricing anyway, and many of them currently sell cheaper cars. At FirstJet on the January 24th earnings call, we need to know when prices will stop falling after this newest round of price reduction in 2024. Interesting to consider whether Tesla's decreased prices are offset by the new zero financing offer for all Model I orders and inventory. I think the corporation would sell more automobiles if they offered zero financing, like its US counterpart, so watch this. January 24. Zero credit may matter. Premises in North America, Tesla is charging extra for most Model S and X hues. In the US, Stealth Gray is free, whereas Ultra Red costs $2,500 in Canada. Stealth Gray is now standard and free. Ultra Red costs $300 in September 2023. Exhibiting any Model S and X color can be requested from Tesla for free. Ram released its first US electric vehicle. The 162-mile range vehicle costs $78,000 before incentives. This is an Amazon or UPS freight vehicle, and 162 miles is never enough. Lucid stock is at an all-time low of $285. The stock fell 95 from its November 2021 peak. Tesla is off to one of its worst starts ever, losing 14 so far this year. Every lease stock is down 40 since Christmas. New spy photographs reveal Audi's first all-electric wagon, the A6 Tron. It will likely be released soon with Audi's other EVS's 100 kW battery. That's an automobile. Front looks like a fast automobile, back like a soccer mother van. Strange sensations in the back. Uber is providing Tesla buyers a $2,000 discount to encourage them to switch. In one of my last videos, I wondered if Uber is cozying up to Tesla. Tesla is the only business that can create self-driving taxis. I wouldn't be surprised if Uber and Tesla collaborate. Tesla stated this in a recent email. The email claims Tesla automobiles improve over time. It says software updates bring the latest safety and entertainment features to your car. To lower production costs, Tesla's battery supplier CATL is coordinating resources and pushing for price concessions. And this article is titled Battery Price War CATL by Pushing Down Battery Prices. If Tesla wants to keep dropping prices, it must include Australian battery costs. Due to technical compliance issues in Australia, Model 3 deliveries will be delayed from January 17, 2024 until further notice. Model 3 deliveries will stop. Volvo's boss remarked, "We have much more pricing power and people have more disposable incomes, so they can afford it if they want to drive an EV." BMW's CFO says combustion engines reached their tipping point last year. He also predicted that battery electric vehicle sales will grow most, while combustion car sales will remain stable until then and then decline. Second, Microsoft has 0.65 free float short interest like number one. The Microsoft deficit is $18.61 billion. Tesla ranks third with 3.6 short interest and 18.5 Reen Day. Tesla will be the top car again. Not a race or crazy flex, but the truth. Tesla will remain severely shorted for the foreseeable future. And this makes it a volatile stack stock both up and down. If shorts cover, which I predict in the second part of 2014, we'll see a far higher upside. If Ford or GM drop prices, they wouldn't be down 3 and 2 practically every day, thus it benefits both sides. Price deliveries in December should be around 86,000. Stocks above their 50-day moving average are decreasing, and today was 1136. This returns the number of stocks above their 50-day moving average to May or April 2023 levels. Performing so well right now. Whereas your wonderful 7 stocks aren't feeling the pain, so the next couple of weeks will be a great test for the markets as we get Fed Jerome Powell on January 31st, which is a Wednesday. Microsoft, Google, Amazon, Apple, if those earnings come in negative equities, can have big downside from here, which won't assist Tesla in the short term, but I still have my $450 price. But team, I have a target on Tesla stock for 2024 because I think EPS will be around $4.50 and the multiple will expand from 65 times to 100 times as rates fall, we avoid a recession, and the Fed turns on the money printer and accommodates the markets again. Any meaningful pullback in Tesla stock continues to be a buy-the-dip opportunity. Today, this is mainly because futures took a significant knock last night. As some of you slept, you probably weren't if you're like me, a night owl who can't sleep. UK inflation was far greater than projected. Peak annual inflation was 4% compared to 3.8% predicted. Core inflation year-over-year was 5.1%, estimate was 4.9% month-over-month. Headline was 0.4%, estimate was 0.2%, and core was 0.6%, estimate was 0.4%. Last month, your headline and core were negative. So whether this is due to shipping costs due to the Red Sea situation or other factors, inflation is starting to rise again in parts of Europe, which is not good for the US. We had some positive news overall. Retail sales month-over-month for the month of December came in better than expected at 0.6. The estimate was 0.4, and last month you were at 0.3. Now why I say this is positive is because you want to see the economy holding up, as I've said before, and I'll likely say it again, 100 different times here on this channel. The economy is 70 to 73 retail sales, people spending money. So if retail sales were to slow down, your odds of a recession dramatically to increase, but as you know, it's 2024 and the markets were pricing in 7 rate cuts. Following this data today, the markets are now pricing in 6 rate cuts. Let's count them together. 1, 2, 3, 4, 5, 6. This would be the Fed funds rate at 3.75 to 4 by the end of 2024. So you're pricing out some of these rate cuts from our markets. Question is, do we continue to price in less rate cuts for 2024? To a certain degree, markets pricing in 7 or even 6 rate cuts is suggesting the economy is probably going to slow down from here, but at the same time, the markets have been trading on this assumption that we're going to see 6, 7, potentially more rate cuts than that. But I will tell you, popular to contrary belief, you won't understand this. If you look at what's happening to the markets today, this is actually a good thing, because Fed Jerome Powell discusses January 31 and offers us a sense of what to expect.